Welcome, Recording Academy members. Thank you for joining Level Up Learn the HITS Act, how to use this new music tax benefit. My name is Michelle Kaplinger. I am the Senior Executive Director of the Atlanta chapter, and today's program is brought to you by the Atlanta and Pacific Northwest chapters. Allow me to acknowledge and thank my colleagues. Atlanta chapter Associate Director Aaron Baxter, Pacific Northwest Chapter Manager Kimmy Dolan, and Senior Executive Director Jessica Toon, and Olive Lally from our National Member Engagement Team. We'd also like to thank our Chief Advocacy and Public Policy Officer, Todd Dupler, and his national team. Today's Level Up Learn will feature a timely, real-world conversation about navigating the HITS Act. What is this benefit? How is it best utilized? And how do I leverage it for my music career? During the session, should you have questions, please use the Q&A feature to submit them, and we'll get to them at the end, time permitting. Today's session will be moderated by Victoria Contreras, a recording artist, Vice President of the Pacific Northwest Chapter, and Grammy Advocacy Chair. Victoria has participated in Grammys on the Hill, advocated for federal legislation, including the HITS Act, and was instrumental in drafting and passing Washington State's Anti-Bot Act, along with supporting a broader ticketing reform efforts on behalf of the creators. Our featured speaker, Angela J. Henry, is a certified public accountant with over 35 years of experience in tax, accounting, advisory, and business management. A principal of Alegna Financial Management, Inc., she serves clients in music, film, TV, and other entertainment industries. Uniquely, Angela is a professional vocalist and executive producer, and an active and valuable member of the Atlanta chapter who can bring financial expertise and firsthand industry perspective. And now, kindly welcome our special guest speakers, Victoria Contreras and Angela J. Henry. Ladies.
Thank you, Michelle, Timmy, and to the Recording Academy staff for putting this important event together. I'm really happy to be here to discuss the HITS Act, especially on the most appropriate day, Tax Day. The HITS Act, short for Help Independent Tracks Succeed, is a piece of U.S. legislation designed to better support music creators as small business owners. It was first introduced in July 2020 with bipartisan support, championed by the Recording Academy, and reintroduced in subsequent sessions before finally being signed into law on July 4th, 2025. At its core, it changes how recording costs are treated, allowing creators to deduct a significant portion upfront rather than over time, which has been a long-standing challenge for independent artists. The HITS Act moves the music industry closer to parity with film and theater. I've personally advocated for this bill for years, and it's not just about the deduction, it's about finally recognizing music as a real investable business. And I'll just say, this is why advocacy matters. We've brought this act to our Grammy member advocate days and Grammys on the Hill, sitting across from elected leaders and making sure they understand exactly what's at stake for creators. This is what happens when you keep showing up, because at the end of the day, this isn't just legislation, it's infrastructure for creative careers. Today, I'm so excited to dig into the details of the HITS Act with my new friend, Angela Henry, a CPA who brings a deep well of experience and expertise in this space, who's going to help translate this into something actionable. Hi, Angela. It's so good to see you.
Hi there, Victoria.
It's a pleasure. So let's dig in.
It's great to be on here with you. So thank you so much for this opportunity. And thanks to the Recording Academy and both chapters.
So let's dig into this law. What was the tax law before, and what is it now with HITS?
Well, great question. So prior to the HITS Act, sound recordings were not treated the same way as film and TV. And so basically, when you had expenses that you incurred for sound recording costs, they had to be capitalized and allocated over a number of years, typically using what we called an income forecasting method. And so basically, you had to estimate how the shelf life of a particular recording and amortize those costs over a certain number of years. Now that we have the HITS Act, specifically with this new section, I know you'll hear a lot of numbers I'm going to throw out, but the specific section is Section 181. Which has been there, that has been outstanding, but now has been expanded to include sound recordings in the music industry. And so now with this particular section, people who are owners of sound recordings now have the ability to elect to expense immediately certain sound recordings up to a certain limit.
Got it. Got it. So this is really helping with cash flow challenges, I'm sure.
Absolutely.
So what about the timing of recordings? Should artists be considering this new tax law when scheduling recording sessions?
Yes, there's a two-prong part to this. The Section 181 that went into effect July 1 specifically spoke about sound recordings that commenced in tax years ending after July 4, sorry, and before 2026. The reason why that's so important is because it's a narrow window just for this special election. Subsequent to that, there's another option, another provision, which is in the depreciation part of the tax law that allows sound recordings to be depreciated at 100% in the year that costs are incurred. So those two sections, 181 and 168, allows for owners of sound recordings to be able to expense costs immediately. So that's kind of the timing. So there's that short timing for the Section 181 election to expense immediately. And then afterwards, we have the provisions of the depreciation.
Got it. So let's dig in. What is qualified as a deduction? What type of expenses are those?
Well, I'd like to say if I went, traveling to the beach, I could expense that, but we all know that's not true.
Right?
But certain qualified expenses, the general language basically says that costs that are directly related to the production of music are considered qualified expenses. Uh, Costs such as mixing and mastering, studio time, musician costs, and other talent fees. Those are costs specifically related to the actual production and recording of music. And so those are considered qualified expenses.
Okay, so things like marketing expenses, tour expenses, music video costs, things like that, they can't be deducted, right?
They are not because they're considered general. They're not actual recording costs, and so those are not included in this particular election. They may be covered under other tax rules, but under this particular election, it is not considered a qualified expense.
Okay, okay. So how does this benefit music professionals and who is qualified to use this benefit?
Yes, so it's a benefit to us because it allows us to expense directly or immediately certain costs that before we had to allocate over time. The ones that it specifically targets are those who are owners of sound recordings. And so I know some that may either go half and half with a producer or a variety of combinations of how people finance a recording. But typically the law speaks to the actual owner of the sound recording is the one that can take advantage of it. So the owner could be an individual or the owner could be an entity. And so it's important to make sure that whoever the owner is, that specific owner is the one that is able to take the election.
Got it. So if an artist pays for the recording, but the producer or pays expenses or makes an investment in equipment towards the same project, can two parties hypothetically claim expenses for the same project?
And according to this law, they will not be able to. So there has to be a distinct owner. So whoever is the one that's going to be on record as the owner of that sound recording or that master is the one that gets to take the election.
Okay, okay. So often nowadays, there's so many self-produced recordings in your home studio, and I'm curious what sort of costs can be deducted, like equipment, samples, plugins.
Well, in a home studio, it's not going to be any different than any other studio or any other venue in which you do a sound recording. Things such as equipment, though, equipment and large items are not covered under this particular section. They may be covered as another type of asset and can be handled differently under another tax law, specifically depreciation. So if you buy a keyboard or monitors or some kind of other equipment, those are handled under the depreciation laws. But for the purposes of Section 181, which is immediate expensing, equipment that could generally be used for a number of recordings are not considered qualified expenses for this particular section of the code.
Okay, got it. Got it. That makes sense. Okay. So what if I'm a songwriter and this is a demo recording that's not going to be released, but the recording is created to shop the song? Does that qualify?
It can. And we always say in our profession, it depends on the facts and circumstances. And so the code really speaks to recordings that commence. There is no requirement for a release date. There's not even a requirement for completion, but there should be an intent for it to be used commercially at some point. So when you talk about demos, if it's just an idea you kind of scratched, or something's kind of experimental or throwaway, that probably will not qualify as a qualified expense or a qualified production. But there are demos, as we all know, that sometimes turn into singles or portions of it are used. And so costs for recording those demos can be considered a qualified expense.
Okay, cool. That's interesting. Um, so I think something that I struggle with, and I'm sure a lot of musicians struggle with, is documenting our expenses. Do you have any tips on best practices for documenting expenses?
Yes, absolutely. That is a area that is really challenging in this creative industry. So I know a lot of people here keep receipts. As long as you keep receipts, you're good. For this specific code section, there are a number of things that they require you to document, such as the actual um, item, the production item. So you've got to actually name it, call it something, identify it. And then documenting the costs that are incurred. And I want to kind of step back a little bit. The law also speaks about the fact that the recording costs have to be done within the United States. So it doesn't consider cross-border type of collaboration. So as long as it's recorded and produced in the United States, you've got to be able to document that that happened in the United States. So that's going to be an important part of being able to, really well document these types of expenses.
Okay, so if something is not recorded in the United States, that also is not something that can be.
Correct.
Got it.
Correct.
Okay.
Right.
Okay.
US based only.
Okay. Now, what about taking the deduction if you're operating at a loss?
Absolutely. It is taken or it's treated just like any other type of expense, certain, based on certain tax rules. But even if you're operating at a loss, you are still able to take this deduction. And of course, you have to take the election and identify the costs. And if you are operating at a loss, those costs are not lost forever. They are subject to the carryover loss rules. And it depends on facts and circumstances. So if you are a Schedule C filer, you're able to carry those over. And of course, it follows the carry over loss rules. If you are in another entity, such as an LLC, loan out, S Corp, those particular costs in those what we call flow-through entities are then allocated to the owners, and the owners are then subject at their level to the carryover loss rules. So it depends on their individual facts and circumstances. But the expenses certainly are qualified. You can deduct them, and then you can carry them over based on your individual facts and circumstances and those tax rules.
Got it. Got it. What if, so us very often, we're not necessarily planning recordings around like the calendar year necessarily. So what if your recording expenses span multiple years? How would you handle that?
Yeah, so absolutely. The law does speak about these, about initiating when the recording is initiated. And so again, if your tax year ends after July 4 and before 2026, that is the initial year that commencement begins on the recording or, the demo podcast, whatever it is that's qualified as a sound recording. Once you do the election, there is an understanding that some projects will overlap certain years. And so when you get to the second year and you're still incurring costs, all you have to do is to attach a statement, tying it back to the initial election that you made and tying the project back to that project that was initially qualified in that initial year. So yes, you can have costs that cross over tax years as long as you tie them together with the proper statements and elections.
Okay, got it. So I think one of the things that's really interesting about this bill is that it's for expenses $150,000 or less, which feels like a real nod to supporting independent artists. Is that how you kind of look at this?
Yeah, it was to target the smaller labels, smaller productions, indie artists, to kind of incentivize
Mhm.
domestic production here in the US and to give some kind of tax relief to smaller artists, smaller projects. And, it is not necessarily intended to target high budget productions. When you get to a high budget, there are other provisions of the law, such as the depreciation law I referred to earlier, the Section 168K, that allows them to depreciate this at the initial release. But this 150, although not completely in line with film and TV, because they have larger caps, obviously, but this was at least a start in the direction for music creators, especially indie productions, to give them some tax relief and to incentivize some production there on their behalf.
Got it. Do you feel like there's any other limitations on this act aside from the amount?
Well, I mentioned before the time limitations, especially for the Section 181
Mhm.
election, that is pretty tight. So unless Congress makes a decision later on this year to extend that, right now it caps or it stops at the end of 2025 for the Section 181 election to be able to expense immediately those costs. So that's a limitation. Um, obviously the amount is a limitation, and it is not in line, obviously, with film and TV who have bigger thresholds such as 15 or 20 million for a qualified uh, production. But those are some of the limitations right now, which is the time and the amount.
Got it. That makes sense. Um, so say that, let's assume I wrote the song, funded the recording, and so I'm ultimately the owner of the recording. How do I actually claim this deduction?
Well, that's actually the best question, right?
Right? How do we do
Because
this?
unless you know how to do it, you can't
Right.
get it, right? So the initial thing is to, as I mentioned before, identify what that production unit is. That's the initial thing. Um, while you're preparing your tax return or if you're working with a professional, the first thing is to attach a statement, basically saying that you're electing to expense these costs under Section 181. That's the first thing. And you want to make sure the actual owner of that recording is doing the actual election. And one thing I want to clarify, there is a difference between the person, the artist or the producer that is creating the sound recording and recording these costs and maybe the entity that they are operating within. And so they may think, oh, let me just do it on my personal tax return. Well, if they individually don't own the recording, the election was done incorrectly. So you want to make sure that if that sound recording is owned by your own entity, S Corp, partnership, whatever, that entity is the one that's making the election. So that's really important to distinguish, making sure that election is done correctly. I already mentioned identifying the actual production unit, the sound recording, whether it's a single, an album, whatever it may be. Then you want to actually document the date that the production costs were first paid or first incurred. So if it happened to be November 5, you want to say November 5 was the date that this particular production actually began when costs were first incurred. And then you also want to identify and document the amount of costs that were incurred during that initial taxable year. That's going to be pretty important. And so the documentation that you've done over time or even collecting it on the back end, you want to be able to calculate and get a sum total of all the costs that were incurred in that particular year and identify it with that statement. And then, the IRS loves for people to make declarations. And so you want to make a declaration that you reasonably expect that this is going to be a sound recording and it's going to be a qualified sound recording. So that's in general, there's some specific language, but that's in general what you want to be able to say in your statement. And those are the basic steps in order to be able to claim this deduction.
Great. That's so helpful to be able to outline the specific steps because that's the part that I think always gets us in trouble or we get worried. Are there audit risks or red flags that creators should be aware of that you that
Yes,
you,
and it all boils down to documentation.
okay.
And so, as long as you take these specific steps and you are properly identifying the production, you're properly, totaling your expenses, and and you have the actual documentation, which means to the dismay of some. Like if you pay that drummer and he loves, Cash App or something else, you've got to be able to have some kind of documentation trail that says that you paid that drummer for this particular project. And so that way it ties those specific expenses to that project. Because if there is an examination or there is an audit and they want to look at your section 181 election and want to know, where the costs and how can you verify that these are costs that belong to that project, you've got to be able to submit something that actually states that. So whether it's requiring them to give you an invoice, sometimes this is a gray area, so I would say your advisor will be able to better prepare you. But sometimes, putting notes like in a Venmo, the memo field, or in, whatever digital payment method or platform you may use, actually using specific notes such as, drummer played this particular on this particular track for this particular project located in, Tennessee, that gives some really, really solid documentation that it's tied to that particular production and then it was done in the United States.
That's excellent. And it reminds me that it's so important to have for hire agreements. And then, of course, that would be a great place to put that too. And
That is
just
the
advise
best
that.
method to have a
Right? That's the
contract
best.
in
Yeah.
place.
So, do I need a tax specialist or can I do this on my own, in my own taxes?
Yeah. Um, well, we always, especially in complicated or complex elections like this, I always advise to seek out a specialist. If you are pretty sophisticated and you can do your taxes and you're good with it and you're comfortable with these particular steps, then by all means, it doesn't require a specialist, but it's advised to be able to tap into someone that you consider your trusted advisor to be able to walk you through these particular steps and make sure that you're fulfilling all of the requirements.
Got it. Yeah, that makes sense.
Mhm.
Um, so we talked a little bit about how this is in line with other entertainment segments like TV and film. Are there ways that this is maybe lacking that isn't supporting artists in quite the same level as actors and folks in the film and TV industry are supported?
Well, number one, the amount.
Yeah.
That is such a big disparity. And granted, this is the first step, and hopefully not the last step in making sure that there's an equalization between music and film and TV and theatrical productions. But I'm glad that they at least expanded the scope of the law to include sound recordings and that, it is a viable entity. So I think that's the number one thing that I believe is lacking in this bill is the amount. The fact that they have such a tight timeline, especially for this election, where other sectors in the industry are able to take Section 181, continuing forward. For the sound recording industry, it's limited to the tax years ending after July of 2025, July 4th specifically, and before 2026. So that is a small window. And my hope is that, we're able to get that expanded and that it's not limited to just that window. But as of right now, that is the limitation that the music industry has when it comes to this particular election.
Right. And I feel like we're probably going to see artists using this more and more as they learn about it. And so they'll have that full year to be able to expense.
Right.
Um,
Absolutely.
just
And one
kind of,
thing, if,
oh, go ahead.
sorry, one thing if I might add, kind of talking a little bit, I know I threw in depreciation earlier in the section 168. That part of the tax code does continue after 2025. So even though music cannot take the section 181 expensing election after the end of 2025, the depreciation part of that is they're able to take that and use that once the sound recording is initially released or broadcasted. Once it's, as we would say, put into service, once it's actually released, then at that point in time, they're able to take that particular depreciation provision. So it's not all lost. There's that provision that is still available, but as far as this 181, it does limit us to this particular time period.
Got it. Got it. So what would you say that this bill is not?
One, it is not free money. Uh, it is
What?
not. You'd be surprised. I hit it like, am I going to get a check? Is this something I'm going to get? But no, it's not free money. It's not a refund, and it's not a credit. It's actually just a benefit, a tax benefit that allows you to immediately expense certain deductions where before you had to allocate it over a long period of time. So it helps with cash flow. That's the benefit, but it is not a credit and it is not a refund. And I wish it was free money, but it's not.
I do too. I do too. Well, I think we only have time for one more question. So, if artists remember one thing from today, what should it be?
That's a good question. If I could summarize it in one thing, the HITS Act is specifically to help with the actual production costs and not everything else around the release. So it's specifically just for production costs. And as long as you have put your ducks in a row and you've documented it, you can take advantage of this. And it's something you don't want to just let it go. So take advantage of it. It's specifically for production, as that benefit is out there for them.
Awesome. Awesome. Thank you, Angela. This has just been such a wealth of information and so incredible to have somebody who has actual experience, not only on the accounting side, but specifically to the music industry. So thank you so much. And we've been monitoring the Q&A, and it sounds like we have covered all the questions. So I'd like to welcome the manager of our Pacific Northwest chapter, Timmy Dolan, to close out our session.
Hi, thank you so much, Victoria, and thank you, Angela, for joining us on what is probably your busiest day of the year. This has been such an insightful conversation, great questions, informative answers, with really actionable steps for creators. So I do want to let everyone know this session is recorded and will be available later on YouTube. Also, if you want to learn more about the Recording Academy's advocacy efforts, you can visit Grammy.com and click on advocacy. And then again, just a huge thank you to our guests, Victoria and Angela, for sharing your time and your talents with us today. We appreciate you so much. And most of all, thank you for joining us for another session of Level Up Learn. As a reminder, Level Up is our global all-member virtual series taking place every third Wednesday of the month, so tune in again in May. And it is designed to keep you informed, connected, and moving forward in your careers. So thank you again for joining us, and we look forward to seeing you at our next session.